Hello traders, it's Douglas on trading. Today is an update of how my funded account has been going, okay? So I've been focusing on that, haven't been making very many videos lately, so it's time to give you an update. And also we're going to show you a good trade on oil today, so stick with me and we'll get right to why I took this trade. Now with the funded account, I started out hot. I was up $600 pretty immediately. And then I almost tore my account apart. All right, so I dropped down quite a bit, maybe like $1,500 or something. I was very near hitting my drawdown, the trailing drawdown. Okay, so once you hit that, they pull your account from you. We don't want that to happen. So I was trading with 2 contracts. And since things went kind of sour for me for a minute, I had to get my head on straight. So I backed it down to 1 contract. That's what we've been trading. We've been fighting back. And we're currently down about 700 right now. Okay, so we are down in the account, but we've been fighting back. Not dead yet. That's the important part. Live to trade another day. So let's take a look at this trade today. Over here on the right, this is my chart. And we're looking at a 1,000 tick chart today. And I like to take trades around the VWAP level. It's kind of a good measurement of where some nice movement might happen. All right, so we had price approaching back to the VWAP level here at about 33.94. Now I got in a little bit too early. I jumped the gun and had to sit through a little bit of pain. So I'll show you that, but I think maybe the reason why I did that is if you come back here to like 640, we had already kind of bounced off that level or that area before, and maybe I thought I was going to miss out or something, but I did not. So over here we've got Bookmap, and Bookmap was gave me the setup or the confidence to take the trade. I never take trades based on the chart. The chart is just a visual representation of where price has been and where it's at. It's easier for me to see that in the chart versus Bookmap. But in Bookmap, that's where the setups happen, all right? I never take a trade unless the setup is actually looking decent in Bookmap. So we're gonna play that out for you. This happened at around 7:15 a.m. Central. Okay, so let's get this rolling. And you back this out a little bit. This highlighted area up here is a little bit of sellers waiting around in the book. And then below, you've got a little bit of buyers, but you don't see that big solid line down here. So to me, the buyers looked a little bit weaker. We were coming back to that VWAP area, which means I'm starting to get interested in looking for a setup. Okay, I'm not taking it off the VWAP just because it's VWAP. I'm looking for a setup in that area. And the most important part, if you come back here, this is UCO. This is an ETF. ETFs are a lot bigger in volume than futures. So a lot of times ETFs can give you sort of a preview of where the areas of interest are going to happen that the futures cannot. All right. And so if you look in here, it is clear that in UCO at around 2337, 2335, that is the area of interest. There's 13,000, almost 14,000 sellers waiting in the book right there. You don't know if they're going to win out and push price down or if they're going to get beat, but you do know that that's where they want to trade. That's a huge advantage. And another reason why I think I jumped the gun is I was thinking that maybe this was just going to push price down through this level here and I might miss out on it, okay? Because you got 1,200 traders down here at the $23 level in UCO. So let's go back and we're going to look for something very specific here. This is an extremely unique indicator. I don't even call it an indicator because it's indicators don't give you real information. They just are formulas based on like candlestick patterns and where price has been in the past. That's not real information. That's why I don't really use indicators. Okay, but this is telling you where stop runs happen and where iceberg orders happen. Now this is real. All right, this is not some formula of highs and lows, this minus that. If you've ever looked at the formulas for indicators, most indicators that people use, you'll realize that they're kind of nonsense, and this is real information. This is reading a very unique set of information called market by order information. It's only available with Rhythmic data feed, and it's only available from the CME. All right, so if you're trading forex or something like that, you cannot get this information. Everybody knows that the big boys are running your stops, right? But you don't get to see it. This, with market by order, with Rhythmic, they give you the data on where stop orders happen and where iceberg orders happen. If you don't know what icebergs are, those are hidden orders that aren't actually showing up in the book. Okay, so big boys get an advantage of having iceberg orders where they can actually hide their order from retail traders. But what they can't hide is once they execute. So we can't see them in advance. That would be really cool. But we can see where they get executed. The same with the stop runs, okay? We can't see where the stops are waiting, but we can see when they get run. And if you come back here, you see this big red dip here. So we had this price movement down. It ran some stops. There was a little iceberg order up, pushing up, and that's kind of where price stopped and then started moving up. Now, it's not that simple. You can't just because you see a stop, you can't take an order, right? It's got to be a place that you're looking to go, an area that you want to execute. You know, it's not an indicator of an entry, is what I'm trying to say. Okay, it is an indicator of what is actually happening. Okay, it helps to know that a bunch of guys got knocked out here. That doesn't mean pull the trigger. And but I didn't really take my own advice here. So when this stop run happened here, you can see I got in. This shows you right where my order happened. This is my stop up here. This is my target at 15 ticks down here. And my stop is 30 ticks away. I never take the full 30 ticks. That just gives me some room to breathe, to reevaluate what's going on. And so I wanted to get in already, and I was ready to jump the gun. So as soon as this stop run happened, I pulled the trigger. And like I said, that was too quick. I should have waited. So we're going to speed this up and let this play out, because I got in kind of in the middle down here of this bar. And I definitely should have waited till we got back to where I like to play, which is the VWAP. And then if we scroll over a little bit, you can see what's going to end up happening. And then you see this big stop run happen right here. Okay, so like I said, it's not an indicator of where to pull the trigger, right? So if you saw a stop run happen down low, you can't just assume that you buy and then, go for a run on the buy side, all right? But what it does mean in this particular situation, we came and we stopped out this area here, and I believe that provided some momentum. Like, it cleared out those orders, comes back, it retests that exact same area, comes up to this little area of sellers, this little highlighted area, bounces off that, and then we go on the run. I ended up pulling my target up from 15 to 10, and then I actually had to leave. So I don't see any of this happening. I left, I had to leave to take my wife somewhere. I left around 7:30ish, and so I didn't get to see any of this happening. Just came home, and it worked out nicely for me, which is always a good thing. If we come back to UCO, you'll see what happened here is I told you about those 14,000 sellers that were waiting here. Well, they get taken out, which is fine, because a lot of times what they want to do is they want to get filled. Okay, they want to get filled. So they get filled, and then price comes back, kind of retests that level, and comes back, kind of retests that level again, and then they're ready to have price move in their direction. So let's go back, and I'll let you see how this plays out. Unfortunately, there is like 100 more ticks left on the table, but that's just the way it goes, and I have to be happy about my 10 ticks. So price bounces around, and then we go on another run down. And there it starts going. And then it goes down even further from there. So that's all I'll show you on that for now. The rest of that's not important. But if you look where I got out, so I got out around what, 33, I can tell you exactly. I got out at 33.75. At this point, we're all the way down. I mean, the low at this point is 33.10. And if we come over here, where did we end up going down to? I mean, goodness. Goodness. You know, we come all the way down. We dip below 32.40. So that was a heck of a run. I got 10 ticks out of 100 or more. But if we come back to the UCO, if you recall, let's see here. Let's get this. This level here was what I was talking about. Oh no, that's not even the level. I was talking about this level way back here. So this is the level we were looking at, and when it came through, you know, it bounced, it retested that level multiple times, breaks that lower level of traders, comes back, kind of plays around in there some more, and then starts eating through some more of these guys. But I think I had the proper setup because there was room between these traders and these traders. And then it gets a little bit, if you look in here, it gets a little bit messier. Like you can see, it bounces off those guys, gets sandwiched between those two, fills, and then they're ready to push through, and then kind of takes out these guys. So I think I had the good spot, even though I jumped the gun a little bit, but this would have been a harder area to play than what I played. So if you got any questions about what happened here, let me know in the comments below. But that's the video for today. We're still kicking, still surviving, and hopefully one of these days I'll actually be able to tell you about making a withdrawal. How about that? All right, traders, that's it for me. I'm out.